So what we're going to go over today is basic. I kind of want to show you when you go to submit your books to us at year end, kind of what kind of shape we want to see them in and how to get your books there. So in order to do that, I'm going to share my screen. And we are going to look at QuickBooks together and just kind of go through the process together. So can everybody see my screen?
Yep, I can see it.
All right. So I'm in a sample company of QuickBooks right now, which is kind of like their generic, you can play around in QuickBooks. So when you're getting your books ready to submit to us for the year, the most basic and the most important thing that you want to do is to make sure that all your transactions are recorded in your books. You want to make sure every expense you've paid is in there and every deposit is in there. That way you're not missing any tax deductions. We don't have to go back and amend later. So the most basic way to get that done is through bank feeds and doing your bank rec. So I'm going to go here to banking. And this is the bank feeds area in QuickBooks. And connect your banks to your online banking and have QuickBooks automatically import the transactions, which is really, really nice. So here we have 3 bank feeds. There's a checking, savings, and a MasterCard. And it's really easy to set up. You can always, if you have more accounts, you can link new accounts. It's real easy. You find your bank. Oh, that's not going to let me because I'm not actually in real QuickBooks, but it would just ask you to log in with your online banking login and password. So once you have your bank feed set up, QuickBooks will import your transactions from your bank, and they're all held here for your review. So you're going to want to go through and just make sure all of these things are accepted into QuickBooks. And QuickBooks is nice because if you have already recorded a deposit, it'll find it and match it. And that way it won't duplicate the transaction. You can just match it. Sometimes if you want to be more efficient, they've got some filters up here. You can filter just for matched. Get those ones out of the way. You always want to check if it's more than one, check and make sure you got the right one. QuickBooks isn't always right on its first guess. So like this one, you're going to look at the date because these are both the same vendor. So that's the 124. The rest all match up. You can kind of get them, accept them all in one fell swoop. And that leaves you with things that QuickBooks doesn't recognize. Now this is where you'll go and you'll tell QuickBooks what you want, where you want to record it. So you'll enter the vendor, and it's always the best practice to always enter a vendor. I know I see a lot of people just enter an account. It goes into the books with an account and no vendor, and you'll just have a more complete record. You'll have better reporting if you always add a vendor to your transactions or a recipient if they're deposits. So QuickBooks will try to guess here in the category what it thinks the transaction is. And it'll guess based on what you've recorded in the past. So if this one doesn't have a history, so it's just going to go to uncategorized. But say I put it to repairs and maintenance. The next time Hicks Hardware comes up, it's going to try to automatically put it to repairs and maintenance. See, we can kind of see it in action with A rental. Let's go ahead and add this one. And let's put it to equipment rental. So you can see that the next two that come through with a rental, QuickBooks automatically is going to put it to equipment rental. And it turns it green. That's how you can kind of know that QuickBooks is doing its guesswork. It's always good to review. I've seen a lot of people just kind of accept things the way QuickBooks brings them in, and then we end up with a lot of transactions in uncategorized income and uncategorized expenses. And that's no good, because that just shows us that we have no idea what these transactions are. So you always want to make sure that they're in the appropriate place. QuickBooks makes it really easy to change it. Say this A rental is something else. You know, we can just change it right here and click add. So QuickBooks makes that really easy. So just make sure you're reviewing your transactions before you're accepting them into your books. Then another thing is rules. Say you have a customer, Books by Bessie, and this is sales. This is one of your customers. It's always sales when you get a deposit from her. There's an option here to create a rule. We'll call it Books by Bessie. And if it's money in, we're going to change it so that if the description says Books by Bessie, it's going to be a deposit, it's going to be sales, and the payee is Books by Bessie. Then that way, it'll match it by itself. Now when auto matched, you can see that as soon as I set up the rule, it cleared the transaction. You can also set it to leave them in the bank feed by turning off this auto add. And that way, say, if there's a chance that it at some point, it leaves it in the bank feed and gives you a chance to review and change it before it automatically accepts that transaction into your books. So once you've accepted all of your transactions from the bank feed, your next step is to reconcile your bank account. So what we're going to do to reconcile your account, we go to the gear here and go to reconcile. You can also get there by going to accounting from over here and reconcile. So QuickBooks makes it really, really easy. If you're using the bank feeds, when you go to reconcile your account, if you've accepted all your transactions through the bank feeds, your account is pretty much going to reconcile itself.
Mm-hmm. Oh.
I'm sorry, did somebody have a question? I hear somebody
I
talking.
feel like there's probably not a whole lot for you.
All right, so you're going to just get the ending balance
Was it any good?
off your bank statement, and you'll put the month end, and you'll go to start reconciling. And you'll see here that the transactions we accepted from the bank feed are already checked off. So since this is in a real account that I don't have a statement for, it's not matching, but say we kind of force it. All right, so essentially, if you accept everything from the bank feed, when you get here and everything off, and if everything's done right and matched up properly, when you get to the bank rec, it's pretty much going to reconcile itself. You'll enter your information, you'll get to the screen, your transactions will be cleared, and you'll have the green $0 difference that shows you your imbalance, which is what you want to see. But it's always good to reconcile your bank account, because you might have situations where maybe the bank feed became disconnected and a transaction got missed. It doesn't happen a lot, but it happens sometimes. And another reason you want to reconcile your reconcile your bank account is because once you're done with your bank rec, you want to look at what's left clear. And you want to ask yourself, does it make sense that these transactions haven't cleared the bank yet? And if not, you want to look into them to see what's wrong. For example, if we're reconciling December and there's a deposit from June that hasn't cleared the bank yet, that something's wrong there. That doesn't make sense that there would be a deposit from 6 months ago that hasn't cleared. So it's possible that it was entered in error. So whatever it is, you want to look into those old uncleared transactions, and any that are not correct, you want to get rid of them. Really, when you're done with your bank rec at the end of the year, the only things that you'll see that haven't cleared yet are going to be checks that might go back a few months, sometimes a little longer, but usually it's just going to be checks. It's on the last few days of the month. Anything else should have cleared by the time the bank statement comes out. So that's just one thing you want to look at to make sure everything's clear. Because if you have deposits that are, say they're coded to sales and they're duplicates, then you give us your books and those aren't real deposits. They never cleared the bank. They're duplicate sales. You send your books to us and your income overstated. You're paying higher taxes. So that's not something that we want or that you want. So it's always good to make sure that at the end of the year, things like that are cleared out. So once you have your transactions entered and your bank account reconciled, that's really the bulk of your work. So the next step is really just kind of looking over things and making sure that, everything's where it should be. So that's where reporting comes in. So we're going to go and we're going to look at a couple of the basic reports at year end that we like to see. And I'll show you some of the things that I look for if I'm doing a cleanup on somebody's books for tax purposes. So let's go to reports. And the first report I will look at is the balance sheet. And the balance sheet basically shows you what you have at a given point in time. So if we're looking at the balance sheet for last year, if I'm looking at your balance sheet, if I'm reviewing your QuickBooks before we prepare a tax return, here's where I'm going to start. I'm going to start with the balance sheet and I just go top to bottom. First, we have your bank account. This one, since it's a sample company and I entered some things, it's got a big negative balance. So what I'm going to do is I'm going to just look at that. I'm going to look at your bank rec to make sure it was done. Outstanding transactions that don't make sense. Then we'll look at accounts receivable. Now, if you're looking at your books at year end and you have AR, it's a good time once a year to look at your accounts receivable and to see if there's anything that needs to be written off. So a good way to do that is to run an AR aging summary. Let's just open a separate report where we can run an AR aging summary. So you'll look at your AR, just go through, make sure that each of these balances are good balances. Does this customer still owe me $239? Did they pay me and it got recorded as a sales deposit instead of being applied to the invoice? You know, it's just a good idea to go through and make sure all of these are legitimate balances. Because I've seen a lot of times where people enter invoices to customers, then when they get the deposit from the customer, they post it to sales. Then you have an open AR, you have a duplicate sales, the invoice and the deposit are going to sales. So your income is overstated. It's doubled. So you really want to watch out for things like that to make sure that you're not paying taxes on income that's not there. So once you've gone through this, make sure that all the balances are good, then you can move on. All right, so we looked at our bank, we looked at our AR. Next thing we have here is this uncategorized asset. Now, what could this be? The uncategorized accounts, there's 3 of them. There's uncategorized asset, uncategorized income, and uncategorized expense. And where these come from is the bank feed. If you don't assign a category to a transaction and just accept it from the bank feed, and QuickBooks doesn't know what it is, it's going to put it in one of these 3 places. So to me, this tells me that this balance hasn't been reviewed. Nobody's looked at it to tell us what it really is. So anytime you're in the balance sheet and you have a balance, you want to see more detail. You'll just click on the number and this pulls up the detail. So this was a check we wrote to Hicks Hardware. So maybe we bought a piece of equipment. So we just want to change that. So let's say we got inventory. So we just want to make sure we don't have anything in those uncategorized accounts. All right, so now that's gone. We've got our inventory here. Inventory, you want to take a look at the balance at year end, compare it to what you have on hand. Companies vary so much in what they use to track their inventory, but year end's a good time to look at your books, make sure it matches the system, or if you do a physical inventory count, it's time to adjust it if you haven't throughout the year. Right. Undeposited funds. This is an account I see a lot of issues with. What undeposited funds is in QuickBooks, when you collect payments from customers, there's a setting that can have them go to undeposited funds. And then when you make a deposit to the bank, say you deposit 4 separate payments from different customers as one deposit, that's when you take it out of undeposited funds and put it in the bank. So it's a way to collect and group your deposits and then deposit them as a single deposit without losing the individual transactions that they're tied to. So if you think about it, it's kind of like, I think of the undeposited funds account as like a folder on my desk where I'm collecting checks. They're going into the folder, they're going into undeposited funds, and they sit there until I take those checks out of the folder and deposit them in the bank. So what you should see with an undeposited funds account is it regularly increasing and then zeroing out as you make deposits. So we're going to look at this undeposited funds account and make sure that that's what's happening. So let's look at this history here. So we have some payments that they've received. They've received several payments here. Make that bigger so we can see it. And they put them in undeposited funds, but I'm not seeing where these funds are going into the bank. They're just sitting here. Now, starting in January, it looks like, okay, so here they're starting to deposit them. And more deposits. So here are the deposits taking the payment deposited funds and moving them to the bank. And here's what we're ultimately looking at. This balance is zero, because eventually, once all the payments have been deposited, you want to see this account zeroing out regularly. So if it gets to zero, you're good at that point. That means everything's been deposited and accounted for. And then it starts again on the 26th with a few more deposits that they haven't deposited yet. A lot of times what I'll see with this account, this is another place where I see a lot of duplicate sales, because I will see clients who they collect the payment from their customer, they put it in undeposited funds, but then when they see the deposit in the bank, instead of matching it to this and moving it out of undeposited funds, I see that deposit from the bank going straight to sales, which again, that's going to duplicate your sales and you're going to pay extra taxes on sales that didn't happen. So if you see a large undeposited funds balance that's not clearing out, that means something's wrong. And in general, most of the time, the effect of that is going to be overstated sales. All right, so that gets us through some of our basic asset accounts. Depending on your business, you'll probably have more than that. This is a very simple company just for use of our webinar today. So let's get to our liabilities. Our first one is going to be accounts payable. And this is very similar to accounts receivable. You're going to want to look at it, look at your balance. Year end's a great time to look at your balances on your balance sheet and make sure everything is where it should be. Make sure all the balances make sense to you and to your business. So let's look at an AP aging summary. So here's our AP aging summary. And we're just going to look at it, make sure, do I really still owe, have I paid this yet? Do I really still owe this $241? Just go through each one, make sure the balances are accurate. If there's something you've paid, you might have recorded it elsewhere instead of paying the bill, or maybe something's not a valid bill and it needs to be written off. But it's a good time to look through these and clean up anything that needs to go. All right. So now we get to credit cards. And this credit card, you'll see, has a negative balance. And generally on the balance sheet, negative balances are kind of a red flag. It means something's wrong. And in most cases, you'll have accumulated depreciation, which has a negative balance, but that's about it. Otherwise, if it's got a negative balance, you want to look into it a little bit closer. So if we look into the MasterCard account for last year, we will see the reason it's got a negative balance is that we had made a $500 payment to MasterCard, but we only have $158 worth of expenses that we charged to the MasterCard. This is another thing I see a lot is when credit card payments are made, we're entering the check written to the credit card company, and it's decreasing the liability account for the credit card, but the expense part is not getting recorded in the books, either because it's not connected to the bank feed or for whatever reason. So you want to make sure that you're capturing those credit card expenses. Connect your credit cards to the bank feed, or if, just make sure they're in there, because that's one place where I see when you write that check to the credit card company and it's decreasing a liability account and the expenses aren't posted against the liability as well, you're missing out on deductions that your business could be taking. So we want to make sure all those credit card charges are captured. And with credit cards, you can reconcile them just like you can a bank account, which I highly recommend doing. All right, and here we've got a couple of other miscellaneous liabilities. And I'll usually just click on anything else, look at the activity, see if it makes sense. So this Board of Equalization Payable, we can see looks like maybe this is a where we're collecting sales tax, collecting sales tax, collecting sales tax, and then we paid the sales tax. That looks good to me. We paid the liability, it's 0 now. And we've got one invoice from December that makes up our balance on the balance sheet, which that looks really good. That looks clean to me. Okay, so now we get down to our equity. Your retained earnings, that happens, QuickBooks creates that as you accumulate income over the years. Your net income, that comes from your P&L. So the other thing you want to look at is your draws. If you're taking distributions or draws or paying personal expenses from the company, here's where they're going to go, because they're not a company expense. They're you using the equity of the company as an owner of the company. So you always want to look at this account, look at the detail, make sure that that's what it really is. Make sure that there's no legitimate company expenses in there that should be on the P&L instead. It's always good to look over that draws account to make sure that it is actually owner expenses and owner distribution. So that gives us an overview of the balance sheet. The basic thing to remember is you should be able to look at these balances and know what they are. Know that, yes, I actually have this amount in the bank, or yes, I'm actually owed this amount. Yes, my inventory, this is what I have in inventory. Just make sure you know what you have in your company and make sure the balances make sense to you as a business owner. So once we've gone through the balance sheet, the next step is to look over the P&L, which is your income and expenses for the year. So I'm just going to do all dates because this is a test company and it's got a lot of stuff in 2022 and I want it to have, or 2023, and I want it to have activity. But generally you'd look at last year. If you're sending it to us for taxes, you'd look at the prior year. So we want to go through the P&L and look at what have we made this year? What have we spent? How are we doing? So it starts with your income. And any of these accounts, you can click in, review the activity, make sure it makes sense. These are all sales and invoices. Yeah, that makes sense. One thing you want to watch for in your sales is what I've mentioned before with the duplicate sales deposits. When you have uncleared deposits on your bank rec, or your undeposited funds. You know, this is another place to kind of double check. Look and see if you, like if I saw a deposit here, let's just put one there just for sake of example. And all right, so if I'm looking at this and I see that I have an invoice here for $300 and about the same date, I have a deposit and say they're both coming from the same person. That might make me wonder if that's a duplicate. If this deposit here, instead of being posted to sales, should actually be a payment on this $300 invoice. So that's just one thing to watch out for, as possible duplicates. So you don't want to have overstated sales. You'll end up paying a lot more than you have to. So we'll just kind of look through our sales accounts, make sure they all look good. And I won't make you look through the detail of all of them.
Quick
But
question for you, Madonna.
yes,
Billing wrote in, would you just delete the invoice?
I'm sorry, you broke up a little bit.
So the question is, would you just delete the invoice if you recorded a deposit instead of paying the invoice?
What I would do is I would change the deposit. I wouldn't delete anything, because you want to keep your, if it's a real invoice that you sent to the customer, you want to keep that history in your records. So what I would do is I would change the deposit. Let me show you here. I'll show you what I would do. So say this $300 is for this $300 invoice to Paulson. So instead of it going to design income, I would put that I got it from Paulson, so I can associate it with his AR account, and I'd put it to accounts receivable, because it's not a second sale from him. It's him paying his bill. That's all else. So that takes it out of our income. And then if I go to my customer center, let's pull up Paulson here. So what I'm going to do is, he has this overdue invoice here of $300. Because what happened is, oh, okay, that's why. Okay, because his invoice is going to multiple accounts. That's why his invoice is more than $300. But just for the sake of example, this $300 is him making a payment on this invoice. So I changed it to AR, but you still have to apply the payment to. So I'll just go here to receive payment. And QuickBooks will automatically apply that deposit that's open to the invoice. If we're doing this, if we're making a partial payment or applying a payment and not making a new payment, we're not collecting $654 applying this $300. So let's zero that out. I'm going to apply the $300 payment to that. Is that going to do it? Why is it not letting me do it? Let's do this. How much is that? $954.75. All right, there we go. Okay, so we're going to apply this $300 to this invoice and save and close. So that way it's applied to the invoice. We still have the $300 from our history, from our invoice that we actually sent to Paulson. And the $300 deposit got applied appropriately to the invoice that we sent to him. So yeah, I'm always real careful about deleting transactions. Unless a duplicate, say you recorded that his $300 payment twice. If it's a real duplicate, yes, you can delete it, but you got to be real careful because it can mess up your bank recs if you've already reconciled your account. If you delete a transaction that's cleared the bank, it's going to cause you problems with your bank recs. And you don't want to delete customer history. You want to keep your records intact of the invoices that you sent to your customers. Does that help? Okay. All right, so that kind of takes us through the income. Now, if you look here, we have uncategorized income. So anything uncategorized needs to be taken a second look at. Let's look at this uncategorized income. We have a $3,000 deposit from the owner. That's not income. We're not going to pay taxes on that. And we don't want that on the profit and loss, because if it ends up going to tax prep with that in your income, you're going to pay taxes on $3,000 that you invested in your company, which is no good. You don't want to do that. So let's move this. And this is going to be equity. This is going to be money. If you're putting money into the business or taking out money, that's equity in the business. That's yours. That's between you and your business. It's not taxable. Up to a certain extent, which we won't get into all that. But generally, that's going to go on the balance sheet. So let me find the equity accounts here. There we go. So this is an owner's contribution. He put $3,000 into his business. He shouldn't be taxed on that. It's not income. Right. All right, so our cost of goods sold. That's just going to be, what you're paying for your materials you're using, or supplies, or wages, if that's part of your cost. And for the rest of the accounts, I just like to look at them, make sure they make sense. One thing that can be nice to do is to look at 2 years side by side. So if we look at this year and previous year, and I'm only doing 2023 because there's no 2021 data in this account. But just compare the side by side. And this account only has really recent data, but if you've had your business for a few years, you should be able to look at 1 year versus the year before and just check for any major variances to see if it makes sense. If you've suddenly spent a lot more than expected in a certain category, it's a good idea to look and see what's there. Make sure it's in the right place. So you look through your expenses. Now there's a couple of accounts. Let's make this just like that again. There's a couple of accounts you're going to want to pay special attention to. You always one account you want to take a close look at is your taxes and licenses. So if you're an S corporation or a partnership and you're paying federal income tax, that's generally not an expense of the company because it's a flow through entity. That income flows through to you, you pay the taxes. So if you have federal income tax or state income tax, Ohio income tax, that's usually going to be a distribution or a draw. Yeah, that's what it's called in here. City income tax, that'll stay a company expense because you like flow through entities like S corporations, partnerships, they still file a local income tax return and pay local income taxes. So if the business is paying the tax, like a city return, then it's a business expense. If you're paying the tax, then it's going to be a distribution or a draw. Okay. You also want to take a close look at meals and entertainment because of right now, if you get a meal at a restaurant for this year, still, they're 100% deductible. But if you go to Kroger's and buy some food or a gas station and buy some food, that's only 50% deductible. So you want to just look at this account. And this is something we all do as part of the tax preparation is we'll look at this account too. If we don't have the detail, we'll ask you for it. And look for anything that's not restaurants, anything that's entertainment. If it's entertainment, it's not deductible at all. So I've known some clients to make separate accounts for just entertainment, restaurant meals, and then other food or something separate. That's up to you. If it's all in one account, we'll ask you for the detail and take a look at it. All right, and here we have an uncategorized expense. That's another one of those uncategorized accounts. We don't want those. We don't want to see those. That means nobody knows what's $1,000 is because it wasn't categorized. Let's take a look. And it looks like Craig Smith, the owner, wrote himself a check. So that's not a company expense. That's going to be a draw. So let's move that. And then we get down to miscellaneous. That's something I'd want to take a closer look at to see what's in there. Make sure it's not any taxes or anything that has any special tax treatment or anything that might be equity or an asset. Anything that's miscellaneous we'll probably ask you about. And it's generally, if you can categorize it somewhere else, it's better to do that than to just throw it into a miscellaneous account. It's like barely a step up from uncategorized as miscellaneous. All right, so once you've gone through everything, you should have a better idea of what your net income is for the year. So that takes you through my process of kind of closing the year-end books, make sure everything's in the right place. Does anybody have any questions or want to look over anything?
If anyone does have a question, feel free to unmute yourself at this time and just let us know your name and what your question is. All right. Doesn't seem like there's any question. If there is, feel free to interrupt me. Today's
I-
session. Oh, go ahead.
Oh, I just also want to say, if you guys come up with questions while you're working, if you want to walk through something real quick, have a quick question, feel free to call me. Call our office and ask for me, and I would be happy to hop on your QuickBooks with you and go over any questions you have. That's what I'm here for.
Wonderful. All right. Just to let you guys all know, today's session was recorded. I will be posting that onto our YouTube channel and sending you guys links, hopefully later today. If any questions, feel free to reach out to Madada. And thank you again for joining our workshop today. We really appreciate it. And I hope you're looking forward to the rest of the years.
All right. Thanks, guys.